Hey guys, welcome to the program. It is really cold outside, so today I have on long sleeves and I really haven't even gone outside. We did go check on the chickens. They they need some water, so we got to give them some fresh water because any water we put out there is freezing at this point. So, hey, but that's part of it, man. It's part of it. It's great to be back with you guys. I have missed you guys of being part of my life here for the last week or so. But as you can tell, I've been pretty busy, and I think I'm really excited to share with you today all the things that have been going on with the channel, with the way that I'm approaching this, and I'm really, really excited about that. So looks like there may be a football playoff game on. Maybe they rescheduled one. It might be the Buffalo game or something. I'm not really sure, but you know what? We're going to go ahead and go on anyway, because at the end of the day, football is football, but we're talking about our future. So we're going to go ahead and get this thing cranked up. So today we want to talk about balance sheet. I know it's exciting stuff. Actually not, but I wanted to go through the balance sheet and talk about what's important. What do we see out of the balance sheet? So when you're looking at an investment and you hear somebody say, oh, they have a strong balance sheet, that's a lot. We hear that a lot, but the question is, what does that mean? And how do we then, how do we then kind of take that and make something out of it and actually determine whether we wanted to invest in a company or not? So I'm going to start with that, and then I'm going to go through all of the changes that I'm talking about with the channel, with where I'm heading with this, and how I'm going to change personally around this. And so I think that's going to be a fun discussion too. And then we will get into whatever it is that you guys want to talk about. So let's go ahead and get started with the balance sheet thing. And if I was like really into it, I would have already switched you guys into this, but there it is. So let me shrink this down a little bit so it's a little bit bigger. All right, so let's get started. We're going to talk about this balance sheet stuff. Try to take some of the mystery away from the balance sheet. So I did get a comment last time that maybe I got a little bit too elementary. And but at the end of the day, there's a lot of people that are watching that may not be and they may not have been strong investors for a while, or they may not be financially into balance sheets, for instance. And there's probably people who are in the middle of the road, and probably people who are at the top end of that. Maybe they're CPAs, they understand balance sheets. But at the end of the day, I'm trying to kind of give something to everybody. So if it's a little bit too elementary for you, just give it a minute. It'll we'll come around there at the end. So let's go to the balance sheet. Why is that important? So first of all, again, elementary, but a balance sheet has to balance. That's why they call it a balance sheet. It balances the assets with the liabilities and owner's equity. So let's talk about that a little bit. What are the assets? What are the liabilities? What are owner's equity? Some components of the balance sheet. Well, the assets are, this is an easy way to think about it. The assets are what the company owns. The liabilities are what the company owes. And I couldn't think of something cute like that for equity. So I just said assets. Equity is assets that are funded by the shareholders. So another way to think of it is assets are what the company owns. Liabilities are what debtors have funded of those assets. And equity is what the equity owners, the shareholders, have funded of those assets. So that's kind of the way to think about it. Assets, liabilities, equity. What are some examples of assets? We have some categories, and again, there are so many nuances to a balance sheet. I just want to hit the high level stuff here. Liquid assets are like cash and marketable securities. Anything that they can turn into cash relatively quickly are liquid assets. Current assets are things like receivables and inventories. If a company owes them money, then that becomes a receivable. If they bought some materials that they're going to make into something else, that's inventory. All of those are called current assets. There's long-term assets like net property, plant, and equipment. So if they buy a machine, if they buy a factory, if they buy land, all of that stuff goes into their net property, plant, and equipment. And an important point that we'll come back to later is that all of those assets come into the balance sheet at cost. So the cost that they paid for it, we'll hit that again a little bit later when we talk about what does all this mean and why do we care. So intangible assets, if you guys have probably heard about goodwill. Well, when a company buys another company, they will offer a certain amount of dollars per share for that company. Let's say they are offering $50 a share. Well, all of the accountants and the lawyers and the engineers, they will go out and they will actually value what the assets are that are being acquired by the company. So if they take so if they had $50 a share, let's say the assets were valued out at $40 a share, then what the accounting rules would say is you're going to book the assets at $40 a share, but the $10 a share, and I'm saying a share, but it's really just going as numbers on the balance sheet, are called goodwill. And basically the company is paying a premium over what the value of the assets are in order to buy that company, because the theory is that when the companies come together, they will be stronger together than they are separately. So it is worthwhile, theoretically, for a company to buy another and pay a premium for it. So the premium in the purchase is goodwill, basically stays on the balance sheet until it's not supportable anymore, and then it gets written down. And that's probably all you really care to know about intangible assets. Okay, here's the liabilities. There's current liabilities and long-term liabilities. I think of current liabilities like payables and any short-term debt. Short-term debt are the payments for debt that are due within the next 12 months. And then long-term liabilities are typically things like long-term debt, anything past 12 months, pensions, leases, those kinds of things are considered long-term liabilities. So here's some key balance sheet items. We have, so if you're saying, hey, what does a balance sheet tell me? What do I need to look at regarding a balance sheet? Well, a balance sheet will tell you what the net debt of the company is. It is basically the debt minus cash. So the debt's on the balance sheet, cash is on the balance sheet. You take the debt, you back away the cash, and it tells the net debt. What is net debt? Net debt says if a company used all of its cash today to pay off its debt, how much debt is still remaining? There's a lot of companies out there with zero net debt, meaning they may have debt, but they have more cash than debt. Microsoft is a great example of that. They have debt on their balance sheet, but they have more cash than debt. So you can't have a minus net debt. It's either a zero or higher. Intangible assets, I think that's a really good thing. A lot of people forget to look at that. But if you got a goodwill amount on the balance sheet and it's like a large percentage of the total assets, I think it's worthwhile to ask the question, how did that happen? And is the management team really going to be able to deliver the value out of those assets? That's a pretty high premium to pay for a company. I tend to say 20% is about, a normal amount. Anything above that, I begin to question, how maybe they paid too much, right, for a merger and acquisition. Balance sheet can tell you that. Thirdly, invested capital. Remember, we talked a few weeks ago about return on invested capital, where the return comes from the income statement, but the on invested capital comes from the balance sheet. We can take the operating working capital, net property, plant, equipment, net other assets. All of that becomes the invested capital. So all of the capital that they've invested to run the business, what kind of return are they getting on it? I think that's one of the most important metrics that we can have as investors is a return on invested capital. And then lastly, working capital. Working capital is basically receivables plus inventory minus the payables. So you take all of that and they're basically investing money in receivables because their customers haven't paid them. They're investing money in inventory. It's sitting in the warehouse. and their vendors are actually funding some of that because the company has not paid for certain materials, and that's why it's a payable. It's going to be paid in the future. So receivables plus inventory minus what the vendors are supporting is their working capital. I think what's most important there is the trend. So it's really hard to say this working capital is good or bad, but when you look at the trend, is management improving working capital? Is it eroding? That really kind of gives a sense for how well the management team is adding some efficiency to the business. So those are some big things. And then, so what questions can the balance sheet answer? First of all, it'll answer the question, can the company fund future growth? Does it have a high net debt, for instance? Does it have, is it eroding liquidity through its working capital? And secondly, did the company pay significantly for acquisitions? So if they paid these big high prices for acquisitions, we have to ask ourselves the question, as an investor, do I think they're going to be able to recover that? Thirdly, is management efficiently using working capital? If they're not, then maybe that gives us a sense for the management team itself. And so maybe I'll throw this out to you guys. What other kinds of questions do you look for in a balance sheet? And if you don't know, maybe you can kind of lay out whether this was helpful or not, whether you found any this to be worthwhile. But there is one question that the balance sheet cannot answer, and that is, what is the worth or value of the company? And you say, well, aren't all their assets on the balance sheet? Can't we just use that as a proxy? And the answer is no. And it depends. Let me just kind of give you an example. Let's take McDonald's, for instance. So one of McDonald's strategies is to actually own the property on which these franchises sit, and they will lease those that land to the franchisee. Now, on the balance sheet, remember, we said we would come back to this. Any kind of property, plant, and equipment is recorded at cost. So let's say 50 years ago, McDonald's bought some property in somewhere, Miami, let's say. That property, let's say they paid $50,000 for 50 years ago. I have no idea what that property would be worth today, but let's say it's $2 million. The balance sheet does not reflect $2 million. It reflects $50,000. So you can't look at the balance sheet and go, that's what the business is worth, because it doesn't mark everything to market, meaning it doesn't change the value of that asset because the market price has gone up. It's recorded at cost. Now, there are pieces of the balance sheet that are marked to market, and I don't want to get into that because I even go to sleep thinking about it. But just for the main point is that the balance sheet is not a good way to measure the worth or value of a company. We got to do other things to do that. So, okay, before we go into something else, let me kind of get into the stream here and see who all's here. We've got here, I'm gonna get rid of this. There we go. We've got Slammer 6789. Who says he hates to miss the content, but the football playoff game conflicts. So, but he'll try to multitask. So that's great, Slammer. I appreciate you showing up in the stream, man. I appreciate that. And hopefully whoever the team is that you're pulling for is going to win. And before I go any further, it is cold outside. So let me know what you're drinking out there. I'm drinking a coffee because it's cold. Okay, let's move on here. Who is next? Oh, we got my buddy Jim Betts. It says a balmy 1 degree Fahrenheit today. Fired up the snowblower, got 10 inches off his driveway, and made it back in time for the live stream. I really can relate to that because we used to live in Ohio, and I am so glad I don't have to do that anymore. Matter of fact, since I'm retired, I'm just letting that snow lay out there And whenever it warms up and melts it off, that's when I'll get back out. So glad you're here, Jim. We got John J. Jim, have fun. Just don't lick with your tongue on the metal pole. That's a great point. And, for a public service announcement, you cannot get this kind of content anywhere else but right here. So what's the movie Christmas Story? If you haven't watched the Christmas Story, you got to do it. It's a great movie. And the guy, oh, wait a minute. We got it. I should have read down a little bit further. John J. says, A Christmas Story, 1983, tongue stuck to the pole. It is a really classic show. You got to see that. So, John, appreciate you bringing that out, my friend. The only thing icy my tongue may touch is an ice cube in an amaretto sour. Okay, so I think we know what Jim's drinking. I'm drinking coffee with cream, and he's drinking an amaretto sour. All right, who else we got in the stream here? We got Gnome in the stream today. Good to see you. I think it is evening there for you, Gnome. I forget exactly where you are. I want to say England, but I'm not really sure. Let me know where you're from. So John says my image is cloudy. Is it still cloudy? If it is, I'm not sure what to do about it. Maybe there's something on my camera, but I don't know. I'll try to figure that out before the next one. So we've got Colin Schultz in the live stream today. Good to see you, Colin. Appreciate you being here, my man. Slammer said he made it. That's fantastic. Yeah, so John, we'll get into this in a little bit, but that's a great question. So we got Jim. We've already seen Jim. All right, looks like John may have some questions here. Let's go to John. Since the net asset value is determined by adding up the combined value of the ETF's individual holdings plus its cash and is usually expressed on a per share basis, I don't see a question in there. The price of an ETF share generally stays very close to net asset value. But if the share price, maybe you're answering, then the ETF ship is trading a discount. That is exactly right. So how does an ETF have any liabilities? I'm trying to put all these pieces together here, John. Maybe I'm misunderstanding, and if I am, let me know. But net asset value of a ETF is different than a balance sheet for a company. The net asset value of an ETF says, hey, here's all the components, and those are valued at market. So for instance, if you have SCHD, every, I don't know how many seconds it goes, but very quickly, it is revalued based on the asset values that it holds. And so that's the net asset value. And that determines, so that is market, whereas a company's balance sheet is not marked to market, even on an annual basis. It is never marked to market for asset values, like fixed asset values. There are pieces that are marked to market, but not a significant portion. So hopefully that's helpful. And maybe I jumped in the middle of a conversation and I don't really know where that's headed. Oh, we got Chris Kamarize in the house. Hey, you were walking the dogs. Hopefully you were walking the dogs in the warm. I have no desire to walk the dogs here today, my friend. Let's see. So we've got, let me just kind of read this real quick. Is determined adding up the value of the assets in the fund. So I don't see a question in there. What is the liabilities of an ETF? I don't think an ETF has liabilities, other than it might have liability around the fee. So if it's paying the managing team, whoever that is, a fee, there could be a liability for that because those would only get paid, at certain intervals. So there could be liability set up for an ETF that would be related to those fees. I can't think of anything else. So hopefully that covered it. I'm not really sure. I'm not even sure what question I'm answering. So that's pretty good. Oh, hello from St. Louis, Punisher 66. Good to have you here, my friend. Glad you're here. And I'm just really stoked that you enjoy the content. Oh, let's see. Man, this what's really cool about this is that you guys really are into this. You are really trying to become better investors, and that's what we're trying to get at here at what has now been rebranded as the Wealth Circuit Investing. So let's see, John J. I would expect that since ETFs are usually managed by funds, there will be administrative fees yep, there you go. Stamp lickers. Love it. Love it, Jim. They are definitely stamp lickers and poll lickers, but only like in the Christmas story, the terminology. Don't let your mind go in the gutter on that, Jim. I can sense it. I can see where you're headed with that. That wasn't what I meant. Ice water, just got done 3-mile walk. So Chris is drinking ice water. That is fantastic. And he's watching the game. Let me know which game that is. Is it the Pittsburgh Buffalo game that got postponed? I didn't realize that there was one today. So maybe I just missed it. Oh, Billy. We got Billy here. He woke up at 5 a.m., saw him coming on at 5:30. He's here. He's drinking hot tea from the Philippines. The weather is beautiful and 75 but windy. Enjoy that, my friend, because it is a balmy. I think last time I looked, it was 21 degrees in Alabama. So that is not a normal temperature for us. It's pretty chilly. The chickens didn't even come out of the coop today. The door, I've got an automatic door on their coop. It came open. And when we went out there to like give them water and stuff, some of them looked out the door and they were like, nah, don't worry, I'm done. They didn't want to come out. It's a little chilly. So Chris is going to rub it in. It is 68 and sunny in Phoenix. Oh man, that's awful. Why would you even share that? No, I'm just joking, man. I'm glad it's warm for you, my friend. Jim says, "Oh, I haven't told you that I hate you." Oh, good, Billy. I appreciate that. Image is clear. Yeah, I mean, it looks clear to me on what I'm looking at, but you just never know with all this technology. All right, where are we headed here? Let's see. Okay, good. Oh, John Jay needs to kick his hamster and make it spin a little faster. So, John, if you can, maybe you haven't fed the hamster today. Give it a little bit of, some carbohydrates. Maybe it'll pick up a little bit. So we got Chris here with a question. So when analyzing a balance sheet on Seeking Alpha, what are the most important lines to look at in your opinion, in my opinion? I think first of all, when I want to look at debt and I want to look at cash, and that'll tell me what the net debt is. I also want to, and again, preparing for that return on invested capital calculation, I want to see how much capital is invested. So I want to look at the inventories. I want to look at the property, plant, and equipment, and any other assets, excluding goodwill, because that's really what the company's working with to make money. And then there are other things that I do look at, but another one that's important to me is goodwill. So actually, it's something that I calculate. I calculate goodwill as a percentage of total assets, and if if that number gets above 20%, that means that that there is a 20% of the value they've paid for the business has been a premium on the assets that they've bought. And why is that important? That's important because they're saying, hey, we're buying, not only are we buying the assets, but we're buying their brands, we're buying their maybe their distribution capabilities. They're buying something other than just the assets of the business. And so if they pay way too much for that, it could stretch them, could give them problems in reaching that profitability to cover for that investment. Then they have to write it off, and then it's a real ugly thing. It's what called a non-cash write-off, but I don't know that. So that's kind of important to me. I do look at equity, but it's a little complicated because when a company does share buybacks, for instance, they will buy those shares back. They'll reduce their cash because they paid to buy the shares. But the other side of that is that they will reduce equity. And so Lowe's, for instance, is a great example of this. Maybe we'll pull them up here in a little bit. But Lowe's has I don't remember if it's a very low equity or maybe even a negative equity balance. And it's because of all of the share buybacks that they've done. So that's important to look at as well. So I want to see how they're managing their balance sheet. If they got a really low equity, then I want to understand, why that is. So those are the things that are important to me. Okay, good. I'm glad to hear that. So John Jay says it's better now. Maybe the hamsters have kicked in. So is recent engines emission cheat considered bad goodwill? Engines emission cheat. I don't know what that is. Maybe you're talking about CMI. Let me know if you're talking about. Oh, yeah. Here it is, down a little bit further. He's talking about CMI. Okay, I understand what you're asking now. So just to catch everybody else up, Cummins, which is CMI ticker symbol, was fined by the government for, some faulty testing, and they basically cheated on some of the requirements for the regulatory requirements for emissions of these engines that they're making. So they got I think it was I don't remember exactly how much it was, 4 billion, 7 billion, something like that. There was some fine that they got from the government. So the question that Noam is asking here, and it's a good question, so let's spend a couple of minutes on it. Is that bad goodwill? I would say it is goodwill in the esoteric sense, but not bad goodwill from the balance sheet perspective. The balance sheet goodwill is related to a transaction, like a purchase transaction. But, bad goodwill for investors, for customers, that's not really valued anywhere on the balance sheet. It does suck for CMI, but and so the stock price went down because of it. But it's not a goodwill transaction that would go on the balance sheet. So hopefully that's helpful. So Jim has already imaged the stripper pole. So sorry for that, my friend. I didn't want to take you there. Okay, update on the game: Pittsburgh versus Buffalo, and Buffalo is up 7-0. Chris, I appreciate you updating us. So I'll, we'll get off of here at some point, and we'll catch all of that. So that definition better represent a stock as in net assets minus liabilities divided by total shares. Let's see. So let me. So that definition better represent a stock as in net assets minus liabilities divided by total shares determine stock price. I would say no. The stock price is determined. So let's separate the balance sheet and the financial statements from the price of the stock. And this is why it's important to do valuation, in my opinion. So a stock price is based on a market. Now, a market is, a stock is introduced into a market. Let me just back that up a bit. So when a stock is IPO'd, initial public offering of a stock, the company issues it out there. It's got a share price. Let's say it's $20. That share price then is received by the company. They're $20 per share. They take that money, any money that they borrowed, and they put that money to work. The shares now go into an open market. Let's say it's a New York Stock Exchange or NASDAQ or something like that. So let's say person A owns the shares at $20 a share. Then, maybe 6 months later, they say, oh, there's another shiny object that I want to go buy. So I'm going to sell off these shares. I paid $20 for them, but they're $25 now. The $25 gets paid by person B. Person B pays $25 to person A. So the company never gets more funds from that transaction. Their initial public offering was the funds. They're off doing their thing, and the marketplace is actually us. It is, we're buying and selling from other investors. So I think that's an important point. The value then of those shares in the marketplace is really dependent on how much I want those shares. So if I really want those shares, I'm willing to pay more for them. And if I'm willing to pay more for them, if I want more shares and there's none available, then the price has to go up until somebody is ready to get rid of their shares. So, let's say that person B bought them for 25, and they said, I'm going to hold these. I think they're worth $30. So the price would have to go up to $30 theoretically for person B to then be willing to sell their shares. So that's kind of the way it works. It's depending on what people are willing to sell their shares for. Now, there are millions of transactions inside this market. So it's not as simple as when I'm saying there's one person versus another person. It's multiple millions of investors out there. But that's the way it works. So the value of the company is, in my opinion, based off what the company is going to deliver in the future in terms of either earnings or dividends. The price on the market is disassociated with that. So you're going to have times where the price is well above what the true value of the company is, if we could determine that. And then you're going to have times where it's below. What I like to do is pick up the below, or at least where it's on value. I don't like to overpay for stocks. I'm not necessarily looking for a hugely discounted stock either. It can be fair value. I'm okay with that. As long as there's great potential for the future. So I answered a lot of questions there that you didn't ask, but I appreciate that question. I think it's a good one. Let's see. Yeah, so the share price, I think I hit that as well. All right, let's move to let's see what John says here. At Wealth Circuit Investing, can we take a look at any undervalued stocks you may have found this week? I think he's asking Jim that, so that's fantastic. All right, so I think it's time now for me to switch gears and go into what I'm doing with this channel. Hopefully, you guys will appreciate it. I wanted to do this on a live stream because the guys that are on this live stream are probably the most serious about what we do on this channel. So I wanted to kind of go into that. Here we go. If you guys are ready, I'm going to put this back on the screen. Oops. There we go. Put that back on the screen. I'm going to take John off. All right. So the purpose of the channel, in my opinion, is to build a community of like-minded investors wanting to create wealth that produces passive income to pay for current and or future expenses. So that's kind of what I'm about. And I think that's the purpose of this channel. So I believe too, that we are stronger when we collaborate. So if we are individuals kind of doing our own thing, I think we are selling ourselves short. I think a collaboration actually brings more value to our individual portfolios because none of us are the smartest people in the room. We are smarter when we are together. We're bouncing ideas off of each other. We're challenging ideas, not being mean to people, but we're challenging ideas, pushing the boundaries a little bit. That is when I think that we're adding the most value. So what's changing in the channel? Here we go. It's being rebranded as Wealth Circuit Investing. We're going to focus on building wealth that ultimately results in passive income. Why do I say it like that? I'm not focused on just dividend stocks. I have investments in VU and, like SOXX, and some of those stocks don't pay dividends. But aren't you retired, Kevin? Yeah, I'm retired, but that doesn't mean every stock that I own or every ETF that I own has to have a dividend. Now, all of the individual stocks that I own do pay dividends, and I do that for various reasons, but I don't want to go into that here. So then the second thing is growing investors through collaboration with like-minded investors. So that's what we're focused on. We're focused on building wealth that results in passive income, and we're focused on growing investors through collaboration. So I think that's a really good thing to be focused on, because at the end of the day, I want us all to be successful, and I want us to get successful, to be successful together. So that's kind of where I'm headed with this. So I've set up a Discord server, and so for those of you not familiar with Discord, I wasn't until about, I don't know, 2 years ago maybe. And I'll tell you, I really enjoy. It's one of the things that I go to in the morning, and even throughout the day, is I just want to see what other like-minded folks are saying. And having a Discord server kind of brings us together into one spot. We can use that. It's a safe place for us to share ideas. So there is a link in the comments to this live stream if you want to join that Discord server. It's free to join. You do have to pass 2 screenings to prove that you are a human, not a robot or a spammer. And somebody told me today that if you're on a phone, you'll have to kind of memorize the CAPTCHA letters. I think there's only 5 of them, so I think you can do that. I trust that you can take those 5 letters, commit them to short-term memory, and put them in. You don't have to do that every time. It's just when you initially go in. Those are the 2 screenings. Once you have passed those screenings the first time, you don't have to ever do that again. It just gets you right in because you have been verified. So that's good. The value of the server is relative to the number of posts. So if you join this server and nobody ever says anything, then it really hasn't helped at all. So don't be shy, just jump right in and ask lots of questions. So the next thing is I have set up something called Buy Me a Coffee. Now, why did I do that? It's similar to Patreon, and I've chosen to invest a lot more time now. Now that the master's degree is over, I've chosen to invest a lot more time. One of the things that I have found is that successful people read and they read and they read and they learn and they apply. So one of the things that I want to bring to you is reviews of investing style books. I put together a list of those, and I'll actually post them in the Discord server. But I think there's like 30 or 32 books that I'm looking at. And so what I'm committing to do is to read one of those books per month and putting a video together. And the first one is coming out this week. It's going to be on Think and Grow Rich, which was written by Napoleon Hill. So it's a fascinating book. I think that you will enjoy the review of that. If you haven't read the book, if you're thinking of reading the book and you want to see a 5 to 8 minute video as a review of that book, it may help you decide, hey, do I want to read that book or not? And so I think it's just going to be a helpful way for me to add value to you. Let's see. So, and also in building this community, it's about, there's a lot that I'm putting into this. And so if that's something that you appreciate, I wanted to give you the opportunity and the manner in which to do that. So one is that, and there's this QR code you see on the screen here. You can certainly follow that to the page, but there's an option there for one-time donation, which I found to be better. Patreon does not allow that. So that was one of the reasons I chose this Buy Me a Coffee thing. The second thing is I put 2 levels together for memberships, and those would be monthly memberships, because I think there's going to be some cool things that we're putting together. One of those is the inspiration level. And you can see it's $3 a month. It's not that much, guys. But what I'm looking for is a group of people who are as devoted to this as I am, and I want us to collaborate together. So that's what this is about. book reviews that we talked about that. You get access to inspiration channels, which are channels for this particular level. There's I'm going to post my portfolio in there every week. I'm going to post the performance of the portfolio compared to the benchmarks. Benchmarks are SCHD, VU, and DGRO. I'm also going to put any trades that I'm making. I'm going to post those in that server before I make them. And I'll also give a shout out on future videos to new members. The next level is collaboration, $10 a month. I'm only limiting that to 10 people. That is going to be much more engaged, and it's going to be, where we actually work together on, what is it we're looking for in stocks? How do we make this thing work better for us? So it's going to be virtual collaboration through Zoom. We're going to have these group meetings. And that's going to be on a quarterly basis. So I think you kind of get the sense of where I'm going with this. So that's what I am looking to build, is a community of people who are like-minded and want to get better at what we do. And we can do that together. So anyway, you can see the QR code there. I also set up a Twitter account. So you can, it's at wealth_circuit. So that's me. And if you are on Twitter and you want to follow me there, do that, because I don't have any followers yet. It's 0. So anyway, that's what I'm doing. That's where I'm headed. Any feedback on that, I would love to have. I'll take that off the screen, and we'll kind of buzz through some of these. So yeah, Chris, awesome. I was never really sure how to include goodwill. I knew it was a premium paid. Absolutely. Let's see, you're talking total equity of balance sheet. Yeah, so the equity is basically the assets minus the liability. So what do they own minus what do they owe? And so it's what you own minus what you owe is the equity. That's how that kind of comes down. Punisher has been investing for almost a year. That's fantastic, man. It's time to take that up a notch, and that's really kind of cool. I'm not really sure how far I am along here. Pfizer might be looking at similar bad goodwill. I think they probably are. A lot of these pharmaceuticals are investing in other pharmaceuticals because they're looking to build their pipelines. So, they may be. I don't invest in Pfizer, so I'm not totally up on what they're doing, but that's very possible. Oh, Punisher. So you're 57. You have buy and hold investor. Not sure what BB, but I BB. But Punisher, we're pretty close to the same age, my friend. So that is fantastic. I am glad you found this community, and I'm glad you're investing. So this is an exciting time for you, because you're probably drinking out of a fire hose. You're learning a lot about investing. And so I'm glad that there's this community that's going to come around and help you in this process. Let's see, the undervalued holdings in my portfolio are O, that's true, Pfizer, STLA, not sure what that is, KHC, that's Kraft Heinz, and Tyson all trade approximately 25 to 30% below fair value. Yep, those are definitely undervalued stocks. So what else do we have? John says, also meat. This is meat for you. What is the top 5 undervalued stocks you see in the research for this week? Yeah, that's something that I can put together, but we'll pass on that for the moment. Definitely agree, Kevin. Everyone gains knowledge and greater exposure to different points of view when we collaborate. Absolutely, Colin. I think that's fantastic. I really look forward to that with this group. Hershey, Starbucks are currently undervalued. I would say, Chris, that maybe Hershey they are slightly undervalued. They were undervalued at around 180. I think they're in the 190s now. They're still undervalued, but they're getting closer to fair value. from my perspective. And again, fair value is in the eye of the beholder. Some people would say it's worth 220. Some people would say it's worth 180. Some people say it's worth 195. You have to really trust who's calculating that fair value. So there's a big range of possible fair values. So we have to be careful as investors that we are comfortable with what that fair value is, because it could lead us to some bad decisions. Let's see. Okay, Punisher. Pension is secure, but I want more when I'm 69. I will retire at 28 and a half years and move on to another job and keep investing. That is a great perspective, man, because when we retire, we don't really stop working. It's not like my uncle, rest his soul. He died in 2009, but he retired at 55. And he, at his retirement party, he told them, he said, they said, his name was Bubba. They said, Bubba, what are you going to do now that you're retiring? He goes, for the first year, I'm going to go and sit on my front porch in a rocking chair. And they said, well, what are you going to do in the second year? And he said, I might start rocking. Glad I brought some coffee in. That choked me up a little bit. So yeah, we when we retire, we get to actually do some things that we may have put off, and so it's fantastic. Kevin Mendoza's in the house. Welcome, Kevin. It's good to have you here, my friend. So let's see, Chris. So the collaboration tier is almost like a new school investing group. Yeah, I think that's probably right, because I'll be the first to tell you I don't have all the answers, but I do have a lot of questions. And so, as a group, as we collaborate and we really dive into these questions around, our portfolios and what do they need to look like, and only we know what we want from our portfolio. So not every portfolio within this collaboration group is going to be the same, because we all have different goals. We have different desires. And so at the end of the day, we need to understand what those are so that we can put the right assets in there to achieve the goals that we're looking for. And that's what I think is about this. So yeah, a new school investing group. I think that's a good way to put it. All right. Okay, I got that. Let's see. Morningstar's fair value of Hershey is 197. That is correct, but it still says it's trading at fair value. So yeah, that's absolutely correct. And so that's what I mentioned before, is that a lot of times there's this hard and fast number. 197 is the number, but it's really more like a range. So when it gets around, if it's 197 and it gets around 190 to 200, I consider that to be fair value. And I'm not opposed to investing in Hershey right now. I think Hershey's a great investment. I'm hoping it comes down a little bit because I want to buy some more, but we'll see. All right. So Starbucks is too much into issues with politics, unions. Yeah, that's kind of the way I feel about it too. I do not own Starbucks, so but mainly because of that. I think they're definitely there's potential there. There's growth there, especially in China, but it's just too was it too bougie maybe for me? But hey, I don't know. That's just the way I kind of look at it. All right, Slammer got into the Discord, and that is fantastic, man. I'm super glad that you're in there. Looking forward to having conversations inside that Discord. And the main thing, though, is that is a good way to get in touch with me. So I will be in there every day. Hopefully, I'll be looking at things and then adding things that are of value in there. If a company craps the bed in some way, I may put something in there about that, but just to kind of keep you guys abreast of what's going on in the market. So hopefully you'll be in there and join that group. That is fantastic. All right. So are you following KView? I typically am not. The spinoff from J&J. Is there potential for better than J&J there? That's a good question. And the interesting thing about that is that, pulling it up in these apps and stuff, there's not enough history yet for KView for that to be meaningful. So, but let me show you something here. If you're interested in this, I've begun to use, let me go ahead and kill that one. And I'm going to present my browser. So hopefully you guys can see that. I'll take GNOME off for the time being. That looks a little small, so let me do something like that. Maybe that helps. I've begun to use an app called TipRanks, and it allows me to put in my portfolio. It'll combine all my portfolios together. One of the things that frustrates me in software or in apps like Seeking Alpha and Morningstar is that you can have separate portfolios, but they don't do a good job of combining them together. Simply Safe Dividends does that. It does a good job with that, but this also does that. Here is something that is really cool that I've found in here. And I'm only sharing this in case you're interested in doing something like this, but let's take a look at the analyst forecast. This is Air Products and Chemicals. It's one of the holdings that I have in the portfolio. But TipRanks lays out what the analyst views are and where they see the stock going. So you see that some say it's going to 240, some say it's going to 347 or as high as 347. And the average of all of those is 301. It's currently trading at 264. So you see that the 301 is a 14% upside. So I think that's useful information. I will say this, that analysts have really no better clue than we do what the price of a stock is going to be, but it is important to kind of see where their heads are at. And so I usually will look at this. They've even got technical analysis. I'm not much into technical analysis, but if you are, it's a great thing. Ownership. They will tell you where the ownership's at. Mutual funds, individual investors own 56% of Air Products. I did not realize that. They'll show you what the insider activity is. Let's see. This is what I really want you to see. These are called uninformative buys and informative sell and uninformative buys. If it says informative, that means that they sold it because they decided to sell it. An uninformative buy is some program that they're in. Maybe it's shares that were offered by the company, and so they bought those shares just as part of the normal process of the company. They didn't buy it because they wanted to buy it or sell it that day. It's just the compensation program that they're in. So you can tell, though, which shares are being bought, which ones are being sold, and for what. So that's good information to have. But also, it's just got, charts and, here's a stock analysis here. You can see just all of this good information. So I have begun to really like this software called TipRanks. And so I contacted them, and they have given me a link. So if you're wanting to, you can try out the non-premium version, the free version, and see if you like it. And if you like it, then, you can actually follow the link that's in the description of this video, and you can get a 50% discount on the first year. So if you really wanted to give it a real run, you can do that at a 50% discount. So that's in the comments here. I wanted to share that just in case you're interested in that. I found it to be pretty valuable. All right, now let me figure out where we left off here. Oh, I'm sorry. Yeah, we were going to talk about Johnson & Johnson. That's why I came in here. Sorry about that. So this is GNOME NK. So let's go to J&J. And looks like for J&J, the high is 218, the low is 160. It's currently trading around 162. So what this tells me is that the analysts that are following this stock, and this is all analysts, there's one that's also top analysts. Top analysts don't believe that there's going to be anything above 195, but the all analysts are saying it's like 215, right? So, but the analysts are thinking that it's going to go somewhere between 160 and 215. It's currently trading down around this 160. So I'm looking at that going, it might be time to add a few shares of Johnson & Johnson to my portfolio. The average of those would be 178. So they're saying, hey, there's about a 10% upside in Johnson & Johnson if you average all of these up. And again, just to reiterate, nobody knows what these prices are going to be, but these folks follow stocks for a living. It doesn't mean they're right. It's like weathermen, right? But at least you can see what they're thinking. Let's see. What else do we want to see here? Let's do KView and see where they're at. KVUE. So KenView. They're trading around 2150, very similar situation. They're looking at a low of 22, a high of 27, about a 13% upside. Looks like they see upside in both Johnson & Johnson as well as KenView. And normally in a situation like this, I would go to fast graphs to see where it has moved historically and where it's going to move in the future. The problem is that Johnson & Johnson, in fast graphs, it's still the entire company. KView is not in there yet. It does not have enough history to actually build a chart. So that's not going to be helpful for us. But I think, Noam, I think that there's value in both Johnson & Johnson as well as KenView. So that might be, a good way to look at it. Let's see who's buying shares. Oh, let's go to ownership. So we've got this director, Richard Allison, and I don't remember what his role is. Oh, Domino's Pizza. He's must be on the board. He was the former CEO and director of Domino's Pizza, and he has bought some shares. So he bought basically what $650,000 worth of the shares of KenView. So, and that was August and May. So that's actually been a while. But it looks like both of them have some future value to them from my perspective. Hopefully that is helpful. All right, Chris is in the Discord. That is fantastic, my friend. So I'm glad that you're in there, and I'm looking forward to actually a lot of folks getting in there. It's not. The intention is not just to talk to me. The intention is to collaborate. The intention is for all of us to work together to build our portfolios. There's a saying that iron sharpens iron. So those of us who are really serious about this are going to, learn from as well as mentor investors. So we, all of us can learn from each other and all of us can challenge each other. So that's what I'm looking forward to in this Discord. Matter of fact, as soon as I get off of here, I'm going to go back into the Discord and take a look and see what's going on, and maybe even put some comments out there myself. So, and again, don't forget to follow me on Twitter because I have 0 followers and I need somebody to follow me on Twitter. I'm not really a fan of Twitter, but that's where a lot of people are. So I need to go where the people are. Let's see. What else do we have here? Is there anything else you guys want to talk about? We got about 40 seconds left in the video. So I don't see anything else other than a thanks from Gnome. But guys, I want to say thank you because you are the guys who inspire me to grow this into something bigger, something that's meaningful, not only to me, but also for you guys. And again, it's not just me bringing this to the table. It's going to be a collaboration. It is about all of us bringing to the community something that's of value. So I think that's really where I want to see this going. And I'm excited that you are a part of that journey. I wouldn't have it any other way. I really appreciate you guys. And, you know, I just, I don't know how else to say that I really, really appreciate you guys being a part of this program. And I'm going to go ahead and sign off now. But again, join me on Discord. Take a look at those buy me a coffee things, and join me on Twitter. And again, I do have Instagram as well. That has not changed. I did change the naming of it, but the handle is still the same. So with that, guys, I'm going to get off of here. It is great to see you, and I'll see you on the next video.